Well, if you were to believe what you're hearing and reading, the global economy is going great guns. The Aussie dollar is going through the roof. The brilliance of our political leaders, combined with the Reserve Bank, has saved Australia. Wall Street banks have had profitable quarters. JP Chase reported $3.6 billion in profit. That's more than $1 billion per month, by the way. Goldman Sachs was only slightly behind at $3.2 billion profit. Goldman Sachs are paying their staff record bonuses. All this only 1 year after being bailed out by US taxpayers. It's a similar picture in Great Britain. However, if things keep going the way they are, next year, 2010, you will probably feel the full force of our economic policies and ask yourself this question: do you remember the 1970s? Well, my next guest, Chris Leithner from Leithner & Associates, does. He's my unpaid occasional commentator on finance matters. Chris, thanks for coming in.
Thank you.
Associated Press, the media organisation, did a Freedom of Information search recently on the phone records of US Treasury Secretary Timothy Geithner. And they revealed just how close he was to 3 US banks, and they just happened to be Goldman Sachs, JP Morgan and Citigroup. Do you think there's any link between the closeness of those banks to Timothy Geithner and their record profits after just 1 year of the financial crisis?
The short answer is yes. And in addition to what you've said, some of Geithner's closest aides have earned millions of dollars per year working for, lo and behold, Goldman Sachs, Citigroup, and other Wall Street firms. So the link between the two is incredibly close, and it seems to be no accident whatsoever that incredibly privileged position, which certain banks have with the Treasury, with the Federal Reserve, gives them, in effect, a license to print money. Has nothing remotely to do with capitalism, with people working hard, taking risks and so on. The risks are borne by the American taxpayer. The benefits are borne by an incredibly small and hugely paid minority of people.
I'm asking you simply because, in theory, the world looks to the United States for the lead, as it were. You know, you often hear in economic reports, and people will tune into this radio station in the morning at 7:45. They'll get the finance news and they'll say, markets in Australia, the US market was such and such last night. Analysts or observers are expecting the Australian market to be strong as a result or weak as a result. In other words, we seem to follow the US market. But what's coming out of media organisations in the US is that there's no gap between the Federal Reserve in the United States and the 3 big banks, JP Morgan, Citigroup and Goldman Sachs.
Well, these banks have paid good money for their politicians, and they're now getting value for money. That's to say, they're the people who actually make policy. And we shouldn't at all be surprised that he who pays the piper, or whatever the phrase is, the pipers and tunes and so on. But it's basically banks who are making policy. The marionettes are people like Ben Bernanke and Tim Geithner. That's precisely right.
Now, the similar thing happens here, though, in Australia. Glenn Stevens, the Governor of the Reserve Bank, spoke in Perth last week, and I rebroadcast part of his speech, and he explained how they reached their interest rate decisions. And they've got basically about 100 contacts around the country. And the Reserve Bank staff ring all the Chris Leithners of the world, the Michael Knoxes, all the big finance houses, and get indicators from them as to what's happening in the economy, and then reach a decision, discuss it, debate it, argue it, look at the data and reach a decision about interest rates. So in other words, the same thing's happening here in a proper formal sense. In other words, accepted practice.
Well, what you say is true, but the problem is much more general than that. We must never forget that the constant policy, the relentless policy of any reserve bank, such as the RBA, is inflation. That's to say, to increase the supply of money. Now, when they do that, there are certain people who get their hands on that money first before anyone else does, and lo and behold, it's big banks. It's they who then can lend it. They can decide what they're going to do with it. But again, the critical point is that given central bank policy, there's a small privileged group of people who get their hands on the money first. The people who get their hands on the money the very, very last are going to be wage earners, they're going to be farmers, graziers and so on in country areas. The privileged minority, as a result of this, the purpose of the policy is to privilege a very small group of people who get fantastic rewards and to penalise the rest of us.
My guest is Chris Leithner from Leithner & Associates. He's an investor. Invests somewhat differently to many organisations, and that he's somewhat regarded as a bit of a contrarian, but anyhow, we'll talk about that another time. In simple terms, how is it that these big American banks, JP Chase, Goldman Sachs, Citigroup, seem to have made so much money in under 12 months.
Yep. It is very simple.
How did they do it?
They, in effect, now can borrow virtually at no cost from the Federal Reserve. That's to say they can borrow tens, hundreds of billions of dollars for a fraction of 1%, for something less than 1/4 of 1%. So they get a gargantuan amount of money. What do they do with the money? They then buy government bonds, treasury securities, what are called T-bills. And those T-bills earn an annualized interest rate of something like 2 or 3%. So if you're getting money for free on the one hand, and then you're getting a return of 2 or 3% for it, it's very difficult to lose money. Then add on top of that they can borrow, that they can use what they've borrowed as collateral, double, treble, quadruple, quintuple their bets. It's basically a no, from the point of view of the banks, a no-lose proposition.
So they can't lose with that sort of system. They can't lose.
They can't lose, and above and beyond that, they can't lose. Remember, because they were bailed out a year or so ago, and as and when this system collapses into a heap, they'll be bailed out again.
Are they investing in jobs? In other words, are they building anything? Are they building buildings? Are they building factories? Are they building new laptop computers or audio listening devices or new environmentally friendly cars? Are they actually building anything or making anything with that money?
No, absolutely not. They are buying treasury bills, and this has two very pernicious effects because they're buying these government bonds. It provides a ready market for government bonds. One of the reasons why the U.S. government is borrowing more and more and more, going more and more heavily into debt, is a sort of a paper shuffling exercise. And the second pernicious effect is that this suppresses, it artificially decreases rates of interest for those government bonds, and more generally, just as you said, because what happens in America reverberates around the world, it artificially depresses interest rates around the world. It basically provides a means whereby speculators around the world can have another drunken party. Why? Because you can borrow cheap, go off and buy this so-called asset, never mind that there's nothing backing it, never mind that the fact that nothing constructive, nothing productive is being created, all of this. The net result, again, I return to the point, a small minority benefit, the rest of us suffer from it.
You think that next year, 2010, we're heading towards a 1970s-style inflationary crisis. On what basis?
Well, whether it happens next year, whether it happens all at once, I'm not sure. Let me take a step back from your point. Media pundits, talking heads on the television would have us believe that the so-called subprime crisis in America, that's finished.
It's all over.
That's done and dusted.
We're saved. And Australia's one of those. We're saved.
That wasn't reported. A mob called the Center for Responsible Lending in the United States testified before Congress late in July. They're an interesting group because they were ridiculed, they were ignored before 2007. They tried to alert people to say, look, there is a gargantuan problem coming very quickly to do with these types of loans. No one listened, of course. The subprime loans detonated with the results you all know about. In their testimony late in July, they said, gee, there are not just one, but two more mortgage crises coming in the United States, what are called Alt-A mortgages, which are a bit more creditworthy than subprimes, and the second group, prime mortgages, are now beginning to default in very big numbers. This year, in 2009, there will be something like 2.5 million mortgage defaults in the United States. The Center for Responsible Lending have forecast that during the next 5 years, there will be between 8 and 13 million mortgage defaults in the United States. In other words, we've had the one tsunami, namely the subprime one. Two more are coming. What's the government going to do about this? I'm returning now to your question. I suspect, or my suspicion, my fear, they're going to paper over the cracks, drastically inflate the supply of money. In other words, they're desperately trying to prevent prices from falling. How do you do that? By pumping out funny money, monopoly money.
Stimulating the economy. Well, the great stimulus.
You call it stimulus. I call it a boondoggle. The result of this is that...
A what? A boondoggle?
Well, of course it is. Of course it is.
So translate a boondoggle for me. It's just...
It's a rort. It's a fraud.
Okay.
It's not based upon productive activity. It's not based upon people's savings and the savings then financing loans. It's simply turning on the printing press or its electronic equivalent. It's a fraud whereby, in a desperate attempt to prevent prices from falling, these things will leak out of the banking system, and there'll be inflation, which at the moment is on stock markets and on bond markets. It'll appear at the checkout at Woolies and Coles, etc. That's to say, prices will rise because the same amount of productive capacity is spread over a much, much greater supply of money.
Now, we already know that there's been a lot of talk in the media today here in Australia. Interest rates look like they're going nowhere but up, up, up. It's being spoken of in positive terms, that this is a sign of the strength of the Australian dollar and the health of the Australian economy and the brilliance of Australian economic settings.
Around the world, savings are in short supply. There's lots and lots of funny money. There's false credit. There are these boondoggles of which I spoke. The one thing that people around, certainly in English-speaking countries, are not doing or find it very difficult to do is save. How to encourage genuine savings, ultimately, for banks to make good these gargantuan bad loans they have on their balance sheets, for a lot of the bad investments to be scraped away, to be made whole again, is that savings has to rise. And the means whereby savings are encouraged is higher interest rates. That has nothing to do, it seems to me, with the alleged competence of people down in Canberra. It has everything to do with a simple shortage around the world of savings.
What about superannuation savings? I mean, my superannuation halved, but as a result of the non-economic crisis we apparently didn't have here, but suddenly my value halved. But what about superannuation savings? Aren't they there? Aren't they a real value in Australia's economy?
The short story is that what people purport to save in superannuation, they say to themselves, I don't have to save anything else. And so that over the past 10 or 15 years, the savings rate in Australia has plummeted to now less than zero. So even though, yes, people do have, by force, by coercion from governments, in effect, the violence of governments, they force you to save. People say, well, because I'm saving into superannuation, I can go on a shopping spree such that my total savings as a result of the super system is lower than it was in the 1970s as a percentage of my income, as a percentage of the productive capacity of the country. So as with virtually everything else to do with government, something that allegedly purports to encourage savings actually decreases the total amount of savings.
So non-superannuation personal savings are at zero, basically?
In a rough sense, yes, or in basic terms, that's right.
Just reiterate for me, I believe you mentioned to me in an email before coming to air that the Bank of International Settlements have warned that what's called the toxic assets of the world's banks, 2/3 of those toxic assets are still on the bank books, or they still exist.
Yes.
They haven't actually worked their way through the system yet. What does that mean for us here?
It means around the world, and including Australia, that we are still at the early stages of some very difficult economic times. The mistakes of the past, the poor policies of the past have not been purged. Governments have desperately tried to paper them over to distract people's attention. Oh, we'll put this funny money in your pocket, aren't we generous people? Not realizing that they're not creating jobs, they're displacing jobs. They're pushing jobs from the future into the present, but the savings aren't going to be there in the future to generate. So the net generation of jobs is zero. What Australia will be left with is a big pile of debt after all of this. Quick additional point, the Bank of International Settlements is a very interesting organization. It's sort of a central bank of central banks, a clearinghouse of information, amongst other things. Its chief economist for the past 5 years, a fellow named William White, desperately tried to alert other central banks, Alan Greenspan, Ben Bernanke, the RBA governor at the time, Ian McFarland. There's some severe problems are heading our way. And it's central banks which are first and foremost the cause of those problems. Of course, no one listened to him, so that when in this country, as he did in Brisbane at the end of September, Glenn Stevens says, look, no one much could have predicted this. No one much did predict this. He was flatly wrong. The chief economist of the central bank of central banks was desperately trying to knock on his boss's doors, saying, fellas, you've caused some big problems here, and they completely ignored him.
I'll speak to you again. Chris Leithner, thank you once again.
Thanks very much.
Chris Leithner from Leithner & Associates, my unpaid occasional economic commentator. We'll keep talking with Chris as things unfold into the new year, which is not that far away, you might be scared to know.